Corn continued to slump to end last week. What's the outlook for this week? AgDay's Michelle Rook is here with Markets Now.
Friday's market closes lower in the grains. Tommy Grisafi with Advanced Trading joining us. And Tommy, kind of a bloodbath on Friday, new contract lows in corn and soybeans. How much of the selling pressure last week was just liquidation before option expiration and whatnot?
Well, Friday, March options expired. That's a fact. They are gone. Hopefully people had sold grain at higher levels and they're happy to have a March call expire. Of course, we noticed that March puts became incredibly valuable here the last few weeks and months. I'm glad for people who had them. Now, Michelle, there's a whole group of people who had delivered corn to the elevator end user ethanol plant, and they weren't happy with the price, so they just dropped it off and said, we'll price it later, aka basis contract. Massive backfire. Corn's broke 60, 70 cents at least since they dropped it off. That's coming straight out of what could have been a profit or a break even. You are looking at a grower who is now going to look back and say, even though I knew my cost of production going into 23, I didn't sell enough and I now lost money farming in 23. Absolutely devastating week for the American farmer.
And the same thing happened, Tommy, when the December contracts went off the board here. As we start a new week though now, do you see farmers selling drying up, or the funds maybe taking their foot off the accelerator at all in the grains?
Yeah, great question. I wouldn't be surprised at all to see the market pop. It could have a vicious pop. You sometimes get to a point where the last person who needs to sell it sells it, and we do nothing but go up after that. But what we do have to remember is we still have really bearish fundamentals, but the corn market is now much under where any exporter or end user could produce it. So it cost a farmer last year $5 to produce a bushel of corn. An end user or a foreign country can now buy it for $4. To me, Michelle, it seems like corn's on sale. But if you had to price it at the end of last week, you know, what's done is done. So we need to start looking forward. We're dealing with big carryouts, and we're still dealing with a little higher cost production. We're also dealing with high cash rents. And one more, the one I think is the most important, interest rates and operating notes are 3 times higher than where they were 3 years ago.
Yeah, certainly a lot to think about there. Tommy Grisafi with Advanced Trading, thanks for joining us, and we'll have more AgDay.
Interested in spending a day with a trader? Call Tommy Grisafi at 800-664-4383.